$123,000. For Bitcoin, this wasn't just another number on a chart, it was a starting gun. While many were glued to the price, they missed the real story, the moment institutional giants and corporate boards decided to rewrite the rules of money forever. So what was it about this specific event that actually changed the game? For years, we've heard the promises, we've ridden the dizzying highs and the gut-wrenching lows. Every cycle brought the same question: when does Bitcoin stop being a speculative sideshow and start being the main event? Well, that question was just answered. It started as a bold experiment by pioneers like MicroStrategy, which has now rebranded as Strategy, but it has since blossomed into a legitimate global trend. As of 2025, a growing wave of public and private firms now hold Bitcoin on their balance sheets. We've seen companies from Japan to the UK and Canada converting their cash reserves assets that are constantly bleeding value to inflation into a digitally scarce, global asset. It means that for the first time in over 50 years, the US dollar has a viable, global, apolitical competitor for the title of the world's primary store of value. This isn't just a hedge, it's an active strategy. It's transitioning from just digital gold, a passive safe haven, to a functional, alternative financial network. The wild volatility that once defined it is beginning to tame as long-term institutional capital provides a stabilizing floor. We're seeing it in the data. Institutions are often the ones buying during dips when retail investors might be panic selling, creating a more mature and resilient market. It's a natural fear, especially when you see a price chart that looks like a rocket launch. But framing it that way misses what's really happening. Since 1971, we've lived in a world of fiat currency where money is controlled by central banks. The question is whether you believe this institutional adoption is a fleeting trend or a fundamental, long-term shift. All the evidence suggests it's the latter. This new wave of capital isn't here for a quick trade. It was the moment of validation, the point where the idea of institutional adoption became an undeniable reality. The rules of money, wealth, and investing are being rewritten in real time. The journey from here won't be a straight line, and volatility is still part of the deal, but the direction of travel has been set. The largest financial institutions in the world have boarded the Bitcoin train, and it has just left the station. The real story isn't the price Bitcoin just hit, it's where it's going next. It was kicked off by a perfect storm: the tsunami of ETF inflows, the strategic pivot in corporate treasuries, and the emerging green light from regulators. Together, these forces have changed Bitcoin's character, transforming it from a volatile, speculative curiosity into a maturing cornerstone of a new financial landscape. It's here for the long haul, looking for a safe harbor in an increasingly uncertain world. Sure, the early speculative frenzy had passed, but the real, world-changing adoption, the part where it gets woven into the fabric of our lives, was just getting started. If you want to stay ahead of this financial earthquake and understand what it means for your money, make sure you subscribe to the channel Crypto Cortex and hit that notification bell. We break down these complex moves into clear, actionable insights so you're not left playing catch-up. That's the stage we're at with Bitcoin. The $123,000 event wasn't the finish line. It was the start of the institutional era. The capital that has flowed in so far is just a trickle from the ocean of wealth managed by global institutions. Its supply can be expanded at will, which is a polite way of saying your purchasing power is on a slow, silent decline. This is the system that institutions are now hedging against. Bitcoin plays by a completely different rulebook. Its supply is fixed, unchangeable, and capped forever at 21 million. Its network is decentralized, meaning no single person or government can control it. In a world of stubborn inflation, corporate treasurers are realizing that holding mountains of cash is a guaranteed loss. Bitcoin offers a viable alternative. Recent reports of financial giant Cantor Fitzgerald acquiring or planning to acquire billions of dollars worth of Bitcoin are a deafening signal to the rest of Wall Street. People can now get exposure to Bitcoin through their 401ks, IRAs, and standard brokerage accounts. This makes adoption spread faster and wider, anchoring Bitcoin more deeply into the global economic fabric. The total assets under management for spot Bitcoin ETFs have already swelled to over $152 billion, a testament to this explosive growth. It's no longer a niche asset for tech nerds. It's a globally recognized financial instrument being plugged into the largest portfolios in the world. They're not just buying an asset, they're acquiring a strategic position in a new financial network. This isn't a single-engine plane anymore. It's a jumbo jet powered by 3 massive turbines of institutional capital. For a decade, the biggest roadblock to institutional adoption wasn't technical. It was regulatory fog. That fog is finally clearing. Recent legislative progress in the US, including the landmark Genius Act being signed into law, is creating clearer frameworks for digital assets. This isn't just about making crypto legal. It's about giving large, compliance-heavy institutions the predictability they need to operate at scale. When the CEO of BlackRock, the world's largest asset manager, warns that the ballooning US national debt could drive investors toward Bitcoin, it's a sign that the conversation has fundamentally changed. It's no longer a conversation about risk, but about necessity. This regulatory clarity has essentially given institutions the green light to move from dipping their toes to diving in headfirst. The surge to $123,000 wasn't driven by your cousin's FOMO or some social media hype. This time, it was different. This was the result of a quiet, calculated, and tectonic shift in the world of high finance. The largest pools of capital on Earth have woken up, and they've chosen a side. What we're witnessing isn't a bubble, it's a real-time replumbing of the global financial system. And that $123,000 price tag? It was simply the trigger, the public announcement that a new era had dawned. 1. The three-pronged catalyst. Why this time is different. To get why this milestone is so much more than a number, you have to look at the engines driving it. First, you have the ETF tsunami. For years, a spot Bitcoin ETF was the holy grail of regulated, easy-to-use bridge connecting trillions of dollars in traditional brokerage accounts directly to Bitcoin. The initial approvals were the key, but the first half of 2025 is when the floodgates truly opened. We're talking about billions of dollars in inflows, sometimes in a single week. BlackRock's iShares Bitcoin Trust (IBIT) is a perfect example, pulling in nearly $2.4 billion in one recent week alone and quickly becoming one of the largest holders of Bitcoin. This isn't just buying pressure, it's a relentless, programmatic fire hose of capital from asset managers and financial advisors who can now allocate to Bitcoin as easily as they buy a stock. This persistent demand acts like a giant beach ball held underwater. You can only suppress it for so long before it surges upwards with incredible force. The second turbine is the corporate treasury shift. This is, without a doubt, one of the most profound changes in corporate finance in a generation. The third piece of the puzzle, and maybe the most crucial, is the political green light. 2. The transformation, rewriting the rules of money. So, with these powerful forces at play, what does it actually mean to say the rules of money are being rewritten? Think about the game we've all been forced to play. This institutional wave is the moment the world's biggest players officially acknowledged this new set of rules. It fundamentally alters Bitcoin's role. This transformation is also about access. ETFs have kicked the door open for a massive pool of investors who were previously locked out. 3. The human element. Is it too late? Whenever an asset breaks new ground like this, the question is always the same. Did I miss the boat? Is it too late? Asking if it's too late now is like asking if it was too late to invest in the internet in the late 1990s. We are in the very first innings of a multi-decade shift in how the world's wealth is stored. So the question isn't whether you're late. This shift is happening faster than anyone predicted. The narratives, the data, and the major players are evolving every single week. The $123,000 Bitcoin event was so much more than a headline. We're at a historic crossroads. For the first time in generations, the dominance of government-issued money is being challenged not by another country, but by a decentralized, global network.